This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil rose by over 4% on Thursday, rebounding from the previous session's losses, as prospects for a prolonged conflict in the Middle East stoked concerns over further supply disruptions. Brent futures rose $4.77, or 4.7%, to $106.99 a barrel by 12:20 GMT, after hitting a session high of $107.84. U.S. West Texas Intermediate crude futures gained $3.74, or 4.1%, to $94.06 a barrel, after rising to as much as $94.84. Current concern is a further escalation of the conflict and flows through the Strait of Hormuz, remaining restricted for longer, UBS analyst Giovanni Stanovo said.
India has secured crude oil supplies for the next 60 days, ensuring stable fuel supplies in the country despite disruption in shipments from the Middle East, the oil ministry said in a statement on Thursday. India, the world's third biggest oil consumer and importer, was buying over 40% of its oil imports from the Middle East. Those supplies are disrupted due to the US-Israeli war on Iran. Higher availability of crude in global markets, mainly from the Western Hemisphere, has helped offset the shortfall, the government said.
Moving on to the top news in the energy sector.
The Iran war is upending the global LNG outlook as soaring prices, damage to major supplier Qatar's export infrastructure and potential delays to new supply raised doubts about previously expected demand from price-sensitive Asian buyers. Before the war, analysts expected global liquefied natural gas supply to rise as much as 10% this year to between 460 million and 484 million metric tons as new capacity, mainly in the US and Qatar, came online, with demand forecast to grow in tandem. Now, Iran's blocking of the Strait of Hormuz, which handles 20% of global LNG flows, and damage to Qatar's liquefaction trains, sidelining 12.8 million tons per year of LNG for 3 to 5 years, have prompted consultancies S&P Global Energy, ICIS, Capella and Rystad Energy to cut global supply outlooks by as much as 35 million tons.
U.S. crude stocks rose more than expected and distillate inventories posted a surprise jump, the Energy Information Administration said on Wednesday. Crude inventories rose by 6.9 million barrels to 456.2 million barrels in the week ended March 20, the highest since June 2024, the EIA said. This compared with analysts' expectations in a Reuters poll for a 477,000 barrel rise. The market was looking for exports to be up strongly in this report because of the war in Iran with barrels shut in the Persian Gulf, said Bob Yager, director of energy futures at Mizuho. In other words, nobody came to the United States to load up on crude oil to make up for the barrels that they were missing in the Middle East. That to me is a surprise. Next, we have the top news in metal market. Gold prices fell more than 2% on Thursday, as crude prices once again rose above the $100 mark, reigniting concerns of rising inflation, with investors mostly pricing out any chance of U.S. interest rate cuts this year. Spot gold was down 1.4% at $4,441.21 per ounce by 12:13 GMT after falling more than 2% earlier. U.S. gold futures for April delivery lost 2.5% to $4,439.80. Oil rose about 3% on Thursday, clawing back losses from the previous session on concerns that protracted fighting in the Middle East will further disrupt energy flows.
Copper lost ground on Thursday as elevated inventory levels and macroeconomic concerns pressured the metal, while aluminium rose to its highest in almost a week after Iran denied holding talks to wind down the conflict in the Middle East. Benchmark 3-month copper on the London Metal Exchange was down 0.4% to $12,267.50 per metric ton as of 10:30 GMT, having fallen as much as 1.7% earlier in the session. The metal widely used in power and construction closed up 1.8% on Wednesday thanks to a bout of dip buying by Chinese consumers looking to restock, traders said, as well as a softer dollar, which makes dollar-denominated metals more affordable for holders of other currencies.
We will now look at the top news in the agricultural sector.
A sharp rise in fertiliser prices is unlikely to prompt big changes in Ukraine's crop planting plans this year, but could push farmers to cut back on fertiliser-intensive corn in 2027, a senior official said on Thursday. The war in Iran has lifted gas and oil prices, driving up the cost of fertilizers made from them. Ukraine is a major global corn exporter, but its yields rely heavily on fertilizer use. Any potential impact on corn acreage would likely begin no earlier than 2027, Deputy Economy Minister Taras Vizitsky told Reuters.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.